Hello, welcome to the first video or the first lesson on Velvet Forex Trading Scheme 2025. And in this lesson, we're talking about FVGs and PD arrays slash key levels. Now, FVGs are actually PD arrays, but why do I have to kind of single them out? Is because this strategy is based off of trade FVGs, and with FVGs you just have virtually everything you need. You can build a super strong model with just FVGs. Okay, so let's get started. Now please take note of this. If you haven't seen the first lesson or the introductory video, please do. It's just about 3 or 4 minutes and you're going to have an overview or the scope of what we are here for. So let's just get started with this. So for this lesson, we're talking about FVGs, PD arrays slash key levels. Okay, so what are PD arrays and what are key levels? Now PD arrays are the points or will I say sensitive areas in price action where price gets to and either reacts. When we talk about react, talk about response, I don't know if you get, such as reversal or retracement. Okay, now let me just keep this simple. So let's get started. Now look at this. Whenever you open your chart, you want to focus on the present price action, And what is the present price action? As you can see from this very point, this is the present price action. How do we know the present price action? From a swing high to a swing low. And when you're talking about going from a swing high to a swing low, that is a bearish price action. Why, just right here we had a bullish price action. Okay, just look at this. So from this very point, from this swing low up until this swing high, we had a bullish price action. While from this very point, we had a swing high going all the way down. This is a bearish price action. That is a bearish leg, and then we had a bullish leg. So once you open your chart, you want to focus on the present price leg. Whatever that happened before now is not your focus. I don't know if you get, so I don't get distracted. You just want to maintain focus on the present price action. And whenever you focus on the present price action, what's the next thing you want to do? You want to identify these PD arrays and key levels. So let's do that together. Okay, so on this present price leg now, we have this high. So focus on this. This is the swing high. And then we have a potential low. But this potential low is of less concern to me. So I have a potential low. Okay. So that's why I'm using this color, because it's of less importance to me. Now, what I want you to do right now is that after identifying this swing high and swing low on the present price leg, I want you to identify the FVGs. They are the fair value gaps. What are fair value gaps? Fair value gaps are inefficiencies in price action. So there is always a need for price to balance those inefficiencies before it can continue. So price trade off of those inefficiencies. Now look at this. It forms when we have 3 candles, like you have a candle to the right. Okay, before I talk about these FVGs, let me talk about swing highs. Now swing high is when you have a candle at the center, and then to the left and to the right you have candles whose highs are lower than the one you have in the center. Now this is more clear and visible. This is a swing high. So you have a bar, then to the left and to the right you have bars whose high are lower than this one. So it's giving us this kind of tray formation. So let me show you what I mean. So you have this high, to the left you have one that is low, to the right you have one that is low, and it's giving you this kind of formation. I hope that makes sense to you. Okay, so another swing high is this. You have this, to the left, to the right you have other bars. Now this is a swing low. Let's go down here. This is a swing low. I hope that makes sense to you. Now we've identified the swing high and a potential swing low on this present price action. The next thing we want to do is to identify the FVG. So the FVG is formed when we have 3 bars, like 1, 2, 3, and then this bar, the low does not intercept with the high of the next one. So look at this. This is the low, and then going down here you have a kind of space right here. I know this might not make sense to you at first. Okay, let me show you something. Let me show you another situation. Now look at this. Now this is 1, 2, 3. You have three candle formation right there. So in this three candle formation, you have the low of this candle going all the way up. This bar is just there, and then you have this is the high, sorry, of this candle, and then you have the low of this candle. Now you see something that is happening here. It's happening here simply in a situation whereby you have an expansion bar. So let's look at a situation where we do not have an FVG. I want to look at for instances that are simple. Now I want you to pay attention to the low of this particular bar, this low here. Okay, so using this trend line, okay, sorry, this one, if you use the low of this bar, mark out a line, you see that this low does not have let's say a space. This bar did not expand so low so that you have a space here, in the sense that watching this one now, this high, the high of this very bar covers. I don't know if you understand. Okay, look at this now. So but if we come to this point, watch the low of this bar, you have a line, and then still same situation, but then the high of this bar, there's a kind of space between this, but there's no space here, so that gives you an FVG, and they are very easy to identify. So I want to talk about that again one more time before we continue, because in the next lesson I'll talk about the types of fair value gap. So we're going to have a full trading scheme. I don't know if you get, so bit by bit. In the next lesson I'll talk about the types, but for now I want you to be able to identify what is an FVG, a fair value gap. So look at this right here. Let's focus on the high of this bar. So watch, you have this place, right? And then after this, so you don't identify an FVG from the third bar, no. Identify after the first one, then you need the third one. So the second one is just the expansion candle. How do you actually know this? The expansion, the second candle, which is the middle one, usually have a kind of an expansion either upward or downward. So if we go after the first one, the second one, and then the third one, so now check, you see that there's a kind of space right here. So whether you are going this way or this way, they don't intercept. You understand? I hope that makes sense to you. Okay, so you see that if we consider this to be a potential FVG, watch, from this low here, you have this is the first bar. The second bar we don't consider, it is the expansion bar. But now when we now check the high of this one, you see that it intercepts with the first one. Now this might not be clear to you at first, but I believe when we continue with the lesson, you are going to understand better. So let's continue to the present price action. So I'm going to identify every fair value gap in this present price action. So I have another fair value gap here, and I want to identify it. So let's see. So I have one fair value gap, two fair value gap, right, on this price leg. I am not focusing on anything that happened before this time. Perfect. So what next thing? I can transpose to the weekly chart. I started off from the monthly chart. Now when you transpose to the weekly chart, a kind of more confusion is going to let's say come to you, but it's not much. You shouldn't be confused. Now why are we moving from one time frame to another? That is an ideal way to trade. You have to be able to adjust from one time frame, move angles and all that. But the important thing I want you to identify here is that the higher time frame fair value gap is always stronger than the lower time fair value gap, which means a monthly fair value gap is stronger than a weekly fair value gap, and a weekly fair value gap is stronger than a daily fair value gap, and a daily fair value gap is stronger than a 4-hour fair value gap. I hope that makes sense to you. So we'll have a bigger price action here now. So on this price leg, look at this, we'll have a fair value gap here on the weekly chart, if you can see. We'll also have one overlapping with the monthly chart, and we'll also have another one here overlapping with the monthly chart. Then right here, I don't think we'll have any other one presently. Okay, so let me also mark out the ones I can see here. So we're going to do this together. From this very point, we'll have a fair value gap, right? And I want to change the color, so that's for the weekly, so that when we transpose to the lower time frame, you don't get confused. We'll have another weekly fair value gap here, right? So let's take note of that. Then we'll have another one here. Okay, So we have identified all the fair value gaps on the weekly time frame, right? Let's transpose to the daily time frame. Yeah, we're gonna see more reasons to be confused. But I'm telling you, you're gonna find clarity in no distant time. So now we have more fair value gaps here, right? So no confusion. Let's just focus on the present price leg. I want to focus on the present price leg. So what's the present price leg? As you can see, the present price leg is from a swing low that you can see to a swing high, or from a swing high that you can see to a swing low. You understand? Yeah. So right now, I've been able to move from the monthly down to the daily, and I want to focus on the present price leg. At every time, you want to focus on the present price leg, and when you get to the present price leg, you want to identify these key levels and the what's it called, the key levels, which are the swing highs, swing lows, and the FVG. So from here we had a bullish run. As you can see, this is a bullish run. So we're going to identify all the fair value gaps that we can see at this moment. I don't want to go anything aside here. I don't want to go. So right here we have a fair value gap right here, quite a small one, but it's still visible. Yeah. Okay. And then we'll have another one right here. So these are the daily fair value gaps. And lastly, 4-hour chart. So let's move to 4-hour charts. Okay, on this 4-hour chart, we can now see at this very point we have fair value gaps again. And now this is the present price leg all the way from here to this point. Now, when you are doing this, please take cognizance of the higher time frame key levels, which we've actually identified here. So we've actually identified the key levels. Now remember, this orange line is a potential low not yet formed. So this white line is more important to us because it's a swing high, it's not potential. We already know that that's a swing high. Okay, so I know that at this point maybe a whole lot of things is becoming so confusing, but it's gonna be simple. Just a moment. Okay, so at this very point now we have clearly a bullish price action. And what is it reaching out for? It's not for this next PD array. For this next PD array. So what you want to do is that I want you to observe what is happening here. Now we had a bullish run going upwards. So while we are going upward, I want you to see what is happening in this price action. So now watch, from this very point we had a 4-hour fair value gap. Watch. Okay, let me get rid of this midpoint, and then okay, yeah, so okay, so I want you to look at this. Immediately price ran towards this upside. It formed the fair value gap between 1, 2, 3. Maybe this is not bold enough. Between 1, 2, and 3. See how price came exactly inside this place and then went up. I want you to observe that. So watch, between 1, 2, 3. Price came exactly inside here and went up. Okay, let's go back again. Let's continue. So watch, we have another fair value gap here. 1. After this fair value gap formed, watch how price thinked back into it and went higher. I'm going to give you more context in subsequent video as regards to target and everything. I'm not going to leave you confused. That's the promise. So I just want you to follow closely. I'm going to give you context, target, and everything, but I just want you to observe this, how it's happening. So let's continue. And I'm just identifying only the bullish fair value gaps. I know I told you about talking about types of fair value gaps in the next lesson. So let's just take it slowly. Okay. Now watch again. There is no fair value gap here. I believe you can see that. But right here we'll have a fair value gap. Price didn't come back to it until this one. We'll have another fair value gap on the 4-hour time frame, overlapping with a daily time frame fair value gap. So watch. Immediately price came to this fair value gap. Watch. This is between 1, 2, and 3. Price sting into it, and what happened? We saw this kind of upward movement. Just pay attention to this. Price stings into it. We saw an upward movement before coming down to this place. Now I want you to just keep identifying this and see how often this works between this again. So watch this. You see how price form the fair value gap, and then price what stinks into this fair value gap. Okay, let me reduce the opacity. See how price stinks into this fair value gap here, and then all of a sudden we saw price going upward. And that's the end for the first lesson. So I want you to go to your charts, mark the present price leg. When you mark the present price leg, you identify the PD arrays there. What are the PD arrays? The swing high, the swing low. You understand? The swing high on a big time frame like the weekly or the monthly time frame, and then you transpose to the next time frame and you identify the key levels such as the FVG there. So watch how price reacts from those FVG. That every time an FVG is formed, price simply stinks to that FVG and goes up, stinks to the FVG and goes up. Now we're going to add more context and more, like say, meaning to this so that you can have clarity. But for now, let's keep it simple and see you again. So have a nice time. It was amazing having you here. Thank you.